Tonight, we look back on 2015 and the year that was.
After 9 long years, the Fed changed course with an interest rate hike.
With the economy performing well and expected to continue to do so, the committee judged that a modest increase in the federal funds rate target is now appropriate.
But did that move end the guesswork affecting so many business decisions? Or add to it, perhaps? By the time it happened last week, the interest rate move was expected, unlike, say, a brand crisis. And there were several of those this year. Volkswagen got caught trying to get around emissions standards. Chipotle customers got sick. Subway's pitchman got a jail sentence. And Starbucks found controversy twice. Once for trying to promote awareness of social issues, and again when it went solid red for the holidays without any decorations. Volatility, it seems, was everywhere. Stocks hit new all-time highs in May before correcting with a steep sell-off, more than 10%, in late August. The market steadied from there, regaining most of the losses during the fourth quarter. Currency and bond markets were shaken and stirred regularly, starting in January when Switzerland ended a cap on the value of the franc against the euro. At the end of June, Greece missed payments on a loan, threatening to divide the European Union. And in midsummer, China, responding to its own crashing stock market down 38% in less than 3 months, devalued its yuan. That shocked world markets again. Economic stimulus in China, Japan, and Europe, along with a rising dollar, made U.S. goods more expensive around the world, denting profit margins for big U.S. multinationals. Think Caterpillar, 3M, Johnson & Johnson, Coca-Cola. In fact, all S&P profits were down more than 3% overall, and no sector felt the pinch more than commodities and energy. In recent weeks, oil prices hit 11-year lows, down more than 65% in a year and a half. An oil glut with no end in sight has worldwide layoffs in the energy patch nearing 250,000 this year alone. U.S. consumers are enjoying those lower gas prices, near $2 a gallon nationally, and auto sales, the retail bright spot, could top a record 17.4 million, set back in 2000. Housing improved too, but the economy will be tested as the Fed raises rates, and mortgages, auto loans, and credit cards all get more expensive. Retail numbers are okay, but not great, and the future of brick-and-mortar stores has been questioned, with online sales up 15% in the third quarter from a year earlier. Mobile sales even stronger, projected to rise almost 39% this year. So there are pockets of strength, but the economy as a whole will be tested now. Wages are only barely higher, but the Fed's bar for interest rate hikes was met, with unemployment now down to 5% and inflation just touching 2% for the first time last month. Well, the hand-wringing and teeth-gnashing over when to raise rates is over. Now we'll begin to see if the Fed's timing was right.